Hello, everyone. This is Jim Riggio, and today with our roundtable, we're going to be speaking with Mark Ansel and going over the Night Owl trading system. Before we get started, just a couple of quick notes. I forgot to mentioning, okay, that today is April 11th, 2018, Wednesday, and a quick note before we start is that Capital Discussions is not a broker-dealer or investment advisor. Presentation you're about to see, as with all information on Capital Discussions, is for informational purposes only. We have no way of knowing, okay, your situation, what level of risk is appropriate for you. Trading options and futures or any derivatives is extremely risky. You should be aware of all risk prior to placing any trades. Any trades that we end up discussing are believed to be accurate, but they're computer simulated, so your results may vary. And with that, let me see if I just can't get rid of this and see if we can get the presentation going here properly. And it's on the wrong screen. And I need 1 minute here, guys. Sorry. I have to stop sharing because I'm sharing the wrong screen. You know what? Let me do this. Maybe this might end up working. Tell me if this is visible enough for you guys, if I make it large like that. Okay. I think that this would be a lot quicker if I get started this way. Okay. And this is just the stuff that I told you, right? We're going to speak into Mark. And I wanted to just kind of go over the performance numbers. Okay, Mark, if you want, I'll just go through these and then we'll end up discussing them.
Okay, that's good.
Okay. I know that you had been doing this since I first met you, well, even before that, right, 10 years ago. I know you've been doing it for about 23 years, but the newest level of the system's been going about how many years?
I began the development in 2011 and went live with it in 2013.
Now, that's your current version, though, right? I mean, the thing is that the predecessors started like 20 years ago, 23 years ago?
The predecessor system dates from 1995.
Okay. That's what I thought. So it's the current iteration, okay, that he's in now. And in the current iteration, okay, you end up seeing that the worst year that you've had so far was a 23% profit in 2015. Great year in 2014. Average winning, okay, has been about 70%, okay, has been your average return, okay, over the years. And here's one of the things that you know, people ask us this all the time, and we put it here because people ended up asking it, but I know that you hate this question as much as I do. What's your winning rate? And you know, you and I have both said, you can end up having a system that wins 90% at the time, but if you're losing $20, okay, every time you lose and only winning $1 every time you win, that's a 95%, okay, ratio of losses. So it's not a good system. So the 73% is your winning rate, but at least what I've seen so far is that your losses have been pretty much about the same amount of money as your wins. However, every once in a while, your wins are even much larger. Is that fair? I've only seen a smaller sample set since we've been doing it here at Capital Discussions.
That's correct. In today's case, for example, on the Euro trade, I pulled the recommendation earlier this morning, and even though it was slightly in the green at the time, so not every day is a max loss kind of day.
That's important. And when you're taking a look at a max loss in terms of, and I don't know how you're going to end up measuring that in terms of either dollars, a percentage that you end up using, you know, when you talk about that type of loss, well, what do we, I mean, and I know it varies, right? It's going to vary, okay, on time. So, but could you just give us like a feel for what max losses or compared to, you know, regular losses look like?
Well, the maximum loss is actually in compliance with the parameters set by the trading bank that we're affiliated with. They do not allow a loss to exceed $3,000 in one day on a $150,000 account. And so consequently, in designing Night Owl with its risk metrics, I want to keep the loss at under under $3,000, and it should come in at around 2,800 if there is no sashaying.
Okay, and translation, no sashaying means that it's going to take the maximum loss. right? Because as soon as you have a successful sachet, you're going to end up reducing your maximum loss.
That's right.
Okay, and we'll get into sachet in a few minutes, guys, as we kind of go through how to end up reading the tables. So that was one of the things that I just kind of wanted to mention. So for your bank, okay, in terms of max losses in the day, the S&P, if it ended up applying to trade at your bank, would have gone for it a couple of times this year because it had more than 2% losses. Okay.
No, I can't comment on that. I don't follow the S&P.
Okay. So, but it is interesting, I've seen the wins, okay, and again, I know that you end up trading very conservatively for the $150,000. I ended up seeing this. I thought was just a great statistic. Okay, the worst drawdown from peak to trough. Okay, the S&P has had drawdowns of 15% or so over the same period of time. And we've gone up pretty much straight. Okay, so a 6% drawdown is nothing. I mean, a lot of times the S&P has to pull back 10% for bigger money managers to want to end up going in. And so it was really interesting. And I know that you ended up adding some changes, okay? And this is one of the things that I've been just most impressed by, is that I've seen you now do this for a couple of weeks, and every single day you analyze what happened, how did it work in the system, was there any issues? So I know that when you ended up having to change your risk management methodology in 2016, it wasn't we had this one loss, I'm going to rearrange everything. I know that you look at it every single day and you study what caused the loss, okay, what was missed. I know it's a general comment. Anything you want to comment on that? Or it wasn't a question.
Well, that is exactly how I approach it. Even on a winning day, I will still study that day in relation to the night owl rules, because I need to know, did I win for that day because night owl was successful, or was I lucky by making a mistake that went in my favor? Because night owl is extremely complex, and it's kind of like the Rube Goldberg trend, or the game we played as kids, the mousetrap game, where there are so many different components. There are so many different components in night owl. And it's, as the developer and the guy who's sitting on top of all of it, it's something that I need to analyze each day to be sure that I'm in compliance with its rules, or like I said, did I just get lucky? Regarding the issue in 2016 specifically, I had to improve it because 6% drawdown with the bank is not going to fly. The bank will allow a max drawdown of 4.5%. So clearly I needed to find something that would improve that 6% drawdown, which I did. It's a proprietary thing in Night Owl, but it has improved the performance.
So the max drawdown for the bank overall, from peak to trough, is
4.5%.
4.5%. And what happens if you lose 4.6%? They throw you out on your butt, or
they open the door and expect you to walk outside.
Okay. And what did you say, $3,000 loss in a day?
$3,000 daily loss limit.
So that's a 2% loss, okay, in a day. So if you have more than a 2% loss in a day, you're out.
No, if you have more than a 2% loss in a day, they will exit the position for you. They could, I mean, it's within their right in the contract to end the arrangement and take back their trading capital. It's very tight. They're taking 100% of the risk, and so they are, their requirements are tight. Okay, guys, is this any better? I will try. That was one of the challenges that I had. I needed to end up getting microphone set up for both of us. Is it okay? Good. So we'll talk directly into the microphone. Can you hear me better now? This is like the Verizon wireless commercial. Can you hear me now?
Okay, good. So, I saw some of the questions of how much money was at risk, okay? Markets end up using the $150,000 every day. I know that you don't start with the $150,000. You end up using more as you end up going into it, and you go into the sachet process. And we're going to go into that, now. I don't want to end up starting to answer those questions because we're going to be talking about this. Just wanted to end up kind of going over the system and what we're going to end up looking like, what we're going to look at, and we're going to go over the euro. Okay, there are two markets that come out every single day. Some days, not often, maybe once a week, once every other week, a signal doesn't come out for a market. Is that about right?
It's a little more frequent than that.
Okay. And so, but that if they're the two systems, so I think almost every night, okay, that I've said, I think maybe one, we had a signal for at least one or the other.
One question that I've been asked is, given that the bank only allows you to start with 3 contracts on the $150,000, how can one play the 2 markets? And my best answer for that is, most of the time the euro will reach target B, Bravo, during the overnight, and crude oil often doesn't get started until around 7 o'clock in the morning. And by that I mean from 6 p.m. until 7 o'clock, give or take. It just kind of goes sideways.
So target B, because we haven't reviewed that yet, means that you're out of the trade.
No, we haven't reviewed that yet. And when we get into it, I do recommend to traders, especially if they're trading small accounts like with 3 lots, that they exit at target B, target Bravo. And again, we'll get into that in a few minutes.
So here, let me just kind of end up setting up some of the things that Mark was already referring to. Night Owl is a directional system. It looks at what the predominant move in the market is. The recent, a lot of times, we're not talking about the predominant move over the last 6 months. We're talking the predominant move over the last day or over the last few days. But we need to have a predominant move. So it's the most recent predominant move. Now, in every move, you guys have seen this. And if you end up taking a look at, the S&P today, right? We started down, but if you just take a look at the move from the time the market's open, right? We've been going straight up, and over the last 15 minutes, we had a little bit of a retracement. So Mark ends up looking at the predominant moves, and he takes a look at any retracements, and then if the predominant move resumes or not. Okay, so he looks at those things.
The most critical thing with respect to Night Owl is in determining the predominant move over the course of the 23 hours from 1800 the previous evening until 1700 close. And then we also study the retracement, but the key is the retracement in the afternoon, not any retracement, but specifically retracements in the afternoon.
Guys, haven't we heard that before, right? When is the professional hour of trading? We always talk, it's the last hour, right? The market makers, and you guys have heard me say this on Monday Market Muse and in other things. When I end up going to breakfast on Sunday, it's with a bunch of retired market makers. And they used to end up calling the first hour of trading amateur hour and the last hour of trading professional hour. They had a lot of harsh words, but they were market makers. Okay, that's the way they are. And so it's in that last hour when you end up seeing the real direction of the market being basically set up for tomorrow, right? Is that a fair way of putting it?
That's essentially right. Yes.
And so it happens in all markets. It's not just our stock market. It's pretty much in every market.
Well, exactly. And Night Owl is designed for every market. I mean, it's a universal strategy. It's not meant only for crude oil or only for euro. In fact, when I began its development, I applied it to 4 markets, including those 2, plus S&P and soy meal. So it's designed to work in all commodity markets.
I know we're about to get a slew of questions as, can Mark do this for the S&P? And he used to, but he doesn't do now. Can you explain why?
Well, the answer really has to do with volatility. And over the last, let's say, 4 or 5 years, the volatility in crude oil and euro has been absolutely excellent. And in the S&P, the volatility, until very recently, disappeared for a while. And quite frankly, the 2 markets that I follow now with Night Owl keep me busy, keep me more than busy. I don't need anything more on my table.
You guys know that the volatility died in the S&P last year. You've seen enough presentations. If you haven't seen it, I'm not going to bring it up now, but I've put together a spreadsheet that actually showed the daily movement of the S&P throughout its history, throughout just the bull market since we bounced off of the bottom in 2009, 2010, 2011, and I take a look at how we had gone up. And then I took a look at 2017. and the volatility had just absolutely died. And when we talk about volatility right now, what we're talking about is realized volatility. How much did the market move from day to day? You know, what was the range? What was the movement? And the S&P just died in 2017. And the challenge that I end up thinking is that there's so many different players in the S&P, and I know it's the most liquid market in the world, but a lot of the high frequency traders a lot of times have on the same trade, and some days they need volatility, some days they don't. I think the other markets tend to end up being just move more naturally with real supply and demand plus traders, okay, but it's not as, I don't want to say it's manipulated, but it's not as influenced. How about that? Okay, so what we're going to do is that we're going to end up reviewing the night owl system, and there's basically you know, two major parts to it. The first major part is what's the direction that we're going to play within a day, and that's goes through a whole bunch of analysis to determine what the direction is. Once he ends up determining the direction, what he does is that he gives us this price array. Okay, and the price array, every price array basically has 5 columns. Okay, the first column is the entry price. Okay, the second column is the stop price for every entry price.
I think we have a slide for this, Jim. No.
So anyway, so if I just go through, okay, and I'm going to bring up the grid in just a minute. Yeah, I'm going to bring up the grid in just a minute. But the 5 prices they're going to be entry prices. Now, the reason why we call it an array, the names are actually in a set of tables, is that there's an entry price, and Mark will give you multiple entry prices. And we're going to end up reviewing, okay, what those entry prices are and which row to end up using. For every entry price, okay, there is a stop price. And then Mark also lists 3 levels of profit targets. And the further the letter goes out, okay, the more aggressive or the more money you're trying to make. Okay, and so there'll be target A. A lot of times you'll hear Mark talk about target alpha, okay, or target Bravo or target Charlie, okay, so that, you know, as an ex-military guy, that's the way he refers to things. But this is what the grid looks like, and what I want to end up doing is that I want to end up going over just one of the systems. So for those of you who haven't seen this before, let me just bring this down here, and so that we can end up maximizing this. If you go into the forums, okay, there's a bunch of different forums, okay. If we go into the member forums, and there is an experts forum. Now, this is for the subscribers, okay. A lot of you guys might not be able to end up seeing the expert forums if you don't end up applying to the service. And so this is where Mark has been putting, okay, all of his trades. So for example, there's a Euro general discussion, and then there's also the Euro trading signal. So it's the signals ones where everything comes out. If I take a look at the Euro signals, there's each of them comes out every single day. He ends up putting out a grid. Now that grid, okay, and I'm in trading signals, okay, and gap range, okay. Which day are we in? Okay, here we were. I was in the wrong place. Now, the other thing that I want to end up making a note of is that Mark also ends up, he's just starting. This isn't available to everybody. We're going to be moving to this within the next couple of weeks. We'd been putting it in the forum because that's the way we had just done things, okay, because it wasn't a standard type of a trade. So what we're going to be doing is that in the classes, okay, if you end up having the classes, you'll see the 2 of them. And if I click on Euro, okay, what will end up happening is that that same plans and notes, okay, will end up being here, okay, that is over here. Let me just show you, okay. And this is the way the graphs, right? So they're going to be the exact same verbiage. We're just going to make it so that it's just easier, I think, to go to plans and notes every day than to end up looking in the forum. The forums are going to stay there for the discussions, but it's going to end up being like any of the other services. I know that some people, it took a little while to end up getting used to how all the information went into the forums. And here are the 5 columns of numbers, okay? So the 5 columns of numbers, every one of them starts with, let's focus on one row first, okay? Because I want to be able to
pick the asterisk row.
Okay, I'm going to pick the asterisk row. Now, Mark, why do I want to pick the asterisk row?
The asterisk row is the most important row in the array, and the reason for that is that asterisk denotes the stop, the initial stop that Night Owl will use in playing the array. So for example, in last night's Euro array, we see that the recommended stop is 24.57.5. So no matter where one should take their initial entry, their stop should be at 24.57.5. That's what the asterisk is telling us.
Okay, so that's a very, very important thing. So from your analysis on this row, I can start where I want, but no matter where I start, it should be the stop price on this asterisk row that's going to be my stop.
That's correct.
Okay, now, is it going to be my stop? Because I know we haven't gotten into this yet, but if I end up putting on any additional trades, I'm not using any names yet, but if I put on any additional trades, is that going to be my stop?
Initially, yes.
Okay, so this is going to be my initial stop for everything, and if I change it, we'll get into how we end up changing.
We will discuss how that gets changed, because it does get changed with a very specific rule, but initially that is the stop, and that's what the asterisk means. The asterisk does not necessarily mean the initial entry. It means the initial stop, and that's what the little asterisk note down below is telling us.
Okay, so I got my first stop. How do I determine where I should start? I mean, you've given me, right, because you've given me, here's this first one, you've given me all of these different prices in here, and if I move this over a little bit, you can see that they're exactly the same here. Okay, so you've given me all of these prices. How do I know which one that I should end up using on my limit?
That really depends on each individual's price risk tolerance. If you are an aggressive trader, then you might want to take the earlier entry. For example, last night, I don't have it in front of me, but the euro opened somewhere around 24.16, give or take. It's not critical to know exactly, but let's just say it opened at 24.16. And if you're an aggressive trader, you might want to take that short at 24.16 and not wait for the asterisk price to elect. And the reason for that is, what if the asterisk price doesn't elect? If euro goes the Night Owl direction from the get-go, it may never retrace to the asterisk price. So the most aggressive trader will take the first price that comes along. A more conservative trader who says, well, I'm not willing to risk 35 ticks, give or take, on a euro trade. I only want to risk maybe 20. So in his case, he may wait for using last night's array as the example, he may wait until 24.40 or so, understanding that 24.40 is kind of far away from where the euro opened, and he may only get filled maybe once every 3 or 4 nights if that's his strategy. There is a trader who trades for our bank who follows an interesting strategy, a variation of what we are looking at here. I can't use her name, of course, but what she will do, she will use that stop, and again, I'll use last night as the example because this would have been her trade last night. She will place her order, her first entry order, at the 24.51. That's the second to the bottom line in our array. And she will use initially the stop of 24.57.5, which is the asterisk stop. Then what she will do, she will just monitor either on a simulator or paper, I don't know how she does it precisely, but she will monitor all the entries that occur before hers so she can stay on top of the sachet. And then if her trade elects, which again in this case was the 24.51, the second to the bottom line in the array, she knows where the stop has backed off to. And at that time, I believe it was at the 74.5 area, which is 2 levels above her 51. My point being that she will wait. She's very patient, and she only gets filled maybe 2 or 3 times a month. But she will wait for that trade and then put all her contracts on that price. So when she gets an election on her entry and gets stopped out, she has a relatively small stop loss, maybe $500 or $600. as opposed to if she gets elected and does not get stopped out, because Night Owl ends up going, or I mean, the market ends up going in her direction, the Night Owl direction, then she's hitting a home run. And again, this only happens 2 or 3 times a month for her, but well, what can I say? I mean, it works for her. She doesn't like to take a lot of risk, and so she doesn't take the faraway entries. Instead, she prefers to load up on the entry that's right in front of that initial stop.
Okay, so there's some questions, and because they're very pertinent to what we're talking about, we're going to end up going through them. When we talk about the market open, it's the trading hours, right? Because you talk about European Open or US Open. I don't want you to think that way. It's the time when things are getting active. But when we talk about the market open, it's when the futures contracts open, and it's going to be different by market. So, Mark, would you just go over the hours for the euro?
Well, I do get questioned about this a lot. And one thing you have to understand, for one thing, I don't know where any of you are in the world. Probably most of you are in North America. But the reality is this: commodity markets trade around the clock. It is always nighttime somewhere. And so
and it's always 5 o'clock in happy hour.
Yeah, right. I mean, you know, so you should understand that concept already.
Muffin also.
Yeah, you should already understand that concept. And so consequently, the comment that I sometimes hear is, well, you know, it sashayed in the middle of the night and I was asleep. And after the sachet, it went against me and I got stopped out. Well, I'm sorry, but I cannot help that. Even the simplest platforms allow for price alerts. You know, that if a certain price triggers, it'll sound off an alert and you'll have to wake up and move your stop if you don't have the ability to do contingency orders. The more sophisticated platforms, and I'm not promoting any here, I will only mention T4 because that's the one I use from Cunningham Trading Systems. You can set up your sashaying in with contingency orders, so that if price A elects, then price B is put out there as a limit order with a bracket OCO for prices C and D, so to speak. So all of this can be automated depending on the platform you use. But if you're using a simple platform, in order that you don't miss something that occurs during your sleeping hours, you've got to use alerts. You can't just trust that when you wake up in the morning, things will be as rosy as they were when you went to bed. Because like I said, it's always nighttime somewhere.
Okay, so I'm going to make a couple of quick comments about Thinkorswim, okay, because I know a lot of you guys use this. I don't know about IB. You've been using IB for as long as I've been using Thinkorswim, by the way, which is about 17 years. Does IB have the native ability to end up doing these contingency orders?
Well, I can say this. If I were using IB for actual trading, as opposed to it's only my data service now. But back when I used their platform, the answer to that question is no, and I would need to use the sound alerts that IB offers. Now, that, mind you, that was, I don't know, 3 or 4 years ago. So since then, it's very likely that they have improved their platform to keep up with the competition. Because again, I can speak for the T4 platform of Cunningham, and theirs does allow for contingency orders.
Okay. What I want to do is I want to go into an order so we can actually explain, okay, how that contingency works and what you can end up doing. Because a lot of people think, oh, one order sends another, or one order cancels another, or you have a bracket order. Okay, those are all things you can end up doing in Thinkorswim and in a lot of platforms. But it's the sashaying, and we're going to get into that in a second. But basically what ends up happening is if there is a second or third trade, you know, a secondary trade that goes on and it's profitable, what happens is, and this is the key to the system, right? This is the absolute key to the system in my mind. If we end up ordering a secondary system, a secondary entry, meaning that we're going to go into one trade, okay, and it doesn't go directly into, so let's just say, for argument's sake, and I know I can use any one of these, okay, as an entry. Now, when Mark said more aggressive or less aggressive, or the one trader who ends up waiting and she's super patient, I want you to end up looking at the prices here in the first column, and I want you to see that we are shorting things. You see, the S is the short or the sell, okay, and when you take a look at the price, obviously, if I short something, do I short it at 124.10, remember that last zero is a half, right? So a lot of times when we speak, we cut that zero out. Okay, it's just trader lingo. So I know it takes a little while to get used to. It took me a little while too. Yeah, it's those currency guys. They mess everything up. Okay. Anyway, do I short at that, or do I wait for the market to go a little bit higher instead of going to 24.10? Do I wait it to go to 24.16?
And you've got to recognize that there are two types of risk, and the focus always is on, well, my risk is the difference between my entry price and my stop loss price. The risk that rarely ever gets any attention is the risk of missing the move. So if euro had opened at 24.16, for example, and dropped like a rock and never elected your 24.22, you've just missed the train. And in that instance, it could have gone to target B and left you standing on the platform feeling foolish because you were holding out for a price that never got elected. Now, with respect to the lady that I mentioned a few minutes ago who waits for that last entry in front of the stop, she accepts that most of the time she's going to miss that train. But she also realizes that when she does get filled, one of two things will happen. Either she will get stopped out at a stop price that's relatively close to her entry, or she'll hit a home run.
Okay, so let's just kind of review this because this is really, really important. So remember, if for the patient lady, okay, she's not going to end up actually entering a short unless the market goes up, and goes up quite a bit, right? It has to go up to 124.51. Okay, we got in things, what is that, 31 ticks earlier, or 31, I know, full ticks. Those half tick guys drive me crazy, okay, with the euro. So I'm going to, when I talk ticks, I'm going to talk full ticks, which is a pip, okay, for you traders who end up trading the foreign exchange stuff. So when I take a look at this, there's going to be a lot of times, the longer we wait, right, the higher we set our limit, because we're entering the first order on a limit. And so when you're shorting, you put the limit above the price. When you're buying, you put the limit below the price.
And in her case, I can tell you, I haven't communicated with her today, but I know her. I know what her trade was. She waited for the 51, which, you know, I'm kind of far from the screen, but I think it's okay. She waited for the 51.
Here's the 58.
Okay, and again, by that time, a couple of sachets had occurred, so she knew the stop had been backed off. So she didn't even need to place her stop at 50, whatever, 57.5, I believe was the asterisk stop last night. But she monitored the sachets. These. Right, and in that first series of red candles, there were, as I recall, either 2 or 3 successful sachets. So that told her.
Let's get into sachets, okay, for a second, because I don't want them to end up missing the point. So the point that I wanted to make, and we're going to get into sachets in just a minute, is that Mark puts all of these prices in here. This is his recommended stop, okay? So what he's doing is that he's giving you his recommended stop. I know a lot of people just go with the entry price that goes along with the stop, but you don't have to, right? If you want to end up having fewer trades, but a greater chance of hitting home runs and having very small losses, you're going to want to go further down in the chain to pick. If you don't want to ever miss a trade, I shouldn't say ever, if you want to miss very few trades, you want to end up using the first value or the second value above it. And so, Mark, do you normally do this? Is the asterisk usually about the third row down? Or do you end up, does that change very much? And I know you put the grades different ways.
Yeah, most of the time the asterisk actually is the second row. There are specific rules within Night Owl that tell me under certain circumstances that the stop should be farther away from the closing price, because the stop is based on where did the market last trade at 5 o'clock. And most of the time, from that analysis, it will put the asterisk on the second line in the array. In yesterday's case with the euro, there was something proprietary in Night Owl that told me that the stop needs to be on the third line. On a Fed day or on a jobs report day, it typically will be even farther down in the array because we are recognizing the extreme likelihood that on a Fed day or a jobs report day, GDP, the European Central Bank announcements, those four specifically, we are recognizing that volatility likely will be greater on those days, and therefore our stop needs to be farther away from the closing price of the previous evening. And again, Night Owl takes all of that into account in its rules when it decides where to place that little asterisk.
By the way, right, I can end up showing you this side. The numbers are exactly the same. Okay, it's just that they're different formats. We're going to end up doing the same format for at least a couple of weeks once everybody gets on, because right now, even if you are signed up, okay, as a subscriber to Night Owl, you don't end up seeing this. Tom will be getting everybody on hopefully over the next couple of days. So right now, if you're a subscriber, this is what you end up seeing. You see this column of entries. Now, I want to go into, we've talked about how to end up enter, but you know, there were several questions about, well, which market are we talking about? You know, European Open, and I want to address that right now. In every system, okay, you're going to have a dotted line. We're looking at a 5-minute chart on the euro going back. I'm going to just highlight this dotted line right here, because what you'll see is that it's when the markets close, right? I'm looking at 5-minute bars. So here's the 45, 50, 55. Okay, 55 going into the 1700 hour, right? Because it's military time down here. Then you can see from 1700 to 1800, the market is closed for an hour. So when Mark was talking about markets trade for 23 hours, you get an hour in between when the day closes for the world and then it opens up again.
What governs that, everyone, is in the case of the euro, that is a CME asset, and the CME is the Chicago Mercantile Exchange, based, of course, in Chicago. Crude oil is an asset of the New York Mercantile Exchange, and so, and CME now owns or controls the New York Mercantile Exchange. So, as a result, the CME establishes these trading hours. And on Eastern time, North American Eastern time, all commodity markets open for trading at 1800, which is 6 o'clock p.m. and Eastern time, and they will trade until 5 o'clock the next afternoon, when they will then shut down for 1 hour. So those are the 23 hours that I'm referring to, and every trading day is like that: 6 p.m. from the previous evening until 5 p.m. Eastern time.
Now, when the floors open, or when the Mercs are, you know, that we really don't concern ourselves with. It's always that same 23 hours. So hopefully that addresses all of those questions, 4 p.m., American Open, and everything. I wanted to end up going through that, okay? So you see that. So Mark does all of his homework. He tries to post this at 6 o'clock, or by 6 o'clock, or at least close to 6 o'clock. I know there's a lot of analysis, and sometimes it's a few minutes late. And so when we take a look at doing this, I want to end up talking about what ends up happening. Let's talk about, you know, this trade today. Okay, and I want to end up going into the basic trade. There's a primary trade, and we talk about secondary trades as sashaying, and we're going to get into that in a second. I know there was a bunch of questions about that. Okay, and is this being recorded? I did hit it. And the answer is yes, it is being recorded. Okay, I just had to double check. I thought somebody saw that the light wasn't on, that it was recording. Okay, so I'm going to end up, I'm just going to pick two numbers. I'm going to, and this is me, and this is my risk level, Mark. So I know that you're giving me the levels that I can end up choosing anything I want. I'm going to end up going with okay, I'm going to end up going with this. I'm going to end up going with the star because that's the recommended stop. Okay, and I know the rule says that initially, when I put this trade in initially, I'm going to end up using this short as a limit. So if you take a look over here, it had to go up to 20, and we're gonna have to make this a little bit smaller, right? My orders were entered at, you know, 6 or 6:30 at some time. And so it had to end up going up to 20. And if you take a look at where 20 is, right, I'm sorry, 22. I'm sorry. They messed me up with that half tick again. I looked at the last one. So it's 22, not 20. So it had to go up to 22. So that means that when the market first opened, I put in a short, and I didn't get filled until about 7:40 or so, 7:40 p.m., 1940 or so. Okay, so now I'm filled. Okay, so now I'm filled and I'm short. So what I want to have happen, I want, you know, Mark, okay, it's so great. I don't want to have to do any work. I want to see it go directly to target. And I know that you tell everybody that you give us the 3 targets. Again, the A will be a smaller profit. B will be, you know, the target profit. And C is going to be a little bit more aggressive. We want to make a little bit more money. I know you've built a system so that it can try to get to C. Okay, and that's why you give us the 3 levels, but I'm just going to wait for B. Okay, so I'm in this trade at this point, and now I want it to go straight down to 123.94, and it goes down to 124.12, so we don't quite get there. Okay, so now what ends up happening? Okay, well, do I just wait and get stopped out? The challenge is that that's not the greatest risk management, and if you're doing just the one trade, you're kind of blowing all of the work and the beautiful risk management stuff that Mark's built into the system.
You really have to follow the market. I mean, you don't have to sit at your screen tick by tick, but come back to it maybe once or twice during the night just to see where the secondary entries have occurred. If your entry was at 24.22, and again, I'm using last night as the example, and you got up in the middle of the night and you see, oh, it's gone up to 24.40 or something like that. So it's elected more prices. Just follow along on your price chart and see if any of the target A's have elected since you went to bed. And for every time a target A price is elected, whether you were in that trade or not, Night Owl has backed off the stop. And that's exactly what happened last night. When I got up this morning, I did this analysis, and I could see that we had 3 overnight elections of targets A, and therefore the stop had backed off from the initial asterisk of 57.5 up to 74.5.
You're jumping. We haven't gotten to backing off.
All right. Okay.
So let's go with what ends up happening. Okay. So, and I know that happens a lot of times. Okay, Marco's directly into the whole thing, and it worked. But let's go through how it ended up working. Okay. So we didn't get to our target. So now what happened? Remember I told you there's a primary target and secondary targets. Let's go with, I'm going to do 2 secondary targets. Again, this is my choice. I can do whatever I want to end up doing, but I'm going to end up, okay, doing 2 secondary targets. If you remember, he was my primary target, and what I'm going to end up doing is that I'm going to choose a secondary target of this one, because why? I don't know. I just went down 3. I like the number 3.
Use the hashes.
Okay. Okay. You know what? I'll use the hashes. I'll use the ones with the hashes on it. So I end up coming here. I want at least, I don't want to sachet. Remember, sachet just means secondary entry for right now. I don't want to end up entering, okay, immediately. I'd like to give it a little bit of room. So I'm going to end up waiting 2 rows to do my second one and 3 rows to do my third one, right? I could do it any way I want, but those are my choices. These are your choices. Okay, so.
And the reason I've set it up this way, people, is for Night Owl traders, I have no way of knowing every individual trader's tolerance for risk or financial situation. And you just have to play the array in whatever form is comfortable for you. If you're sitting on a big account and you have the ability to play every entry, well, more power to you. If you're an aggressive trader and you want to take the first entries, because most of the time Night Owl will get them right, good for you. If you want to be extremely conservative and hold out until that last line, like the lady I was talking about, there's nothing that says that's wrong. You just have to realize that the farther away you put your entry price, the less likely you are to get filled, but also the lower the loss you will take if you do get elected and then stopped out.
Okay, so, okay, I'm going to go through, though, my rules, because I need a specific example to end up going through. I'm going to enter on the asterisk. Okay, that's going to be my primary. I'm going to have 2 secondaries. I'm going to use the pound signs for both of them so that they're marked. Okay, so let's see what happens, okay, yesterday. So I entered the first one. Okay, we talked about this. I got in at around a little after 7 o'clock or so. It goes above 24.20, which is right here. Right, it goes above 24.20 on this line. So I'm in. Start to lose a little bit of money, and then lo and behold, marks right, and it starts to go in my direction, but, okay, it reverses on me and it starts to go up. And as it starts to go up and time goes by, and here, let me just move this, okay? And you'll see what happens as I move the clock. Uh-oh, it's starting to go higher. Now, look at this first price here. This first price is 124.33. And what happens? We're up to 31. Okay, let me make this a little bit smaller. Okay, oh, that's too small. I don't want to do it that much. Let me make it so it comes back over to here. I want to get 7 o'clock in. Oh, my goodness, sorry. And let me just, what I'm going to do is I'm going to move the market out so it's just so we get some more stuff in here. Okay, so what ends up happening is that, and I want to go and highlight from the point that we entered. Okay, so this way I have that we entered right around here. And I'm going to just highlight the rest of the day. And so this way we can see what ends up happening. So my second entry, remember, I'm shorting. So my second entry, I'm going to end up having a limit. I'm going to have a limit order so that if it, remember, we're shorting. So a limit order means that it has to go up in order for my limit to get filled. And so if we take a look at 33, 33 is right about here. So my second order fills, okay, right around 2:30 in the morning. Okay. Now, I have a question, Mark. Am I going to use this stop, or do I always use the same stop?
You still use the same stop until you get a target A. And if you just go a little bit farther into the future, Jim, you will see that you will get your first target A. And then when that occurs,
okay. Let me do this. Let me draw some lines. I want to draw some lines so this way we can see what we're going, right?
you're going to put lines where your entries are, right?
I'm going to put lines where my entries are.
Okay.
Let me put some drawings in here, and I want to put in some price levels.
I'll wait for you because I'm not familiar with Thinkorswim. I don't use Thinkorswim, so I'll just wait till you get your lines on the chart.
So the first one was, we put it in, okay, over here, the first one was the 22. So this was 22 is right about here. I know it's not going to be perfect, so guys, don't hold me to the fact that they're not going to be perfect, but this was about where we entered the first one. Right, 21, a little bit higher. Close enough for government work. Okay, right there. Okay, so that's our entry. Okay, and so what I'm going to end up doing is that I'm going to put in my secondary entry, okay, over here at 33. So if we come up over to here, 33 is right in between 32 and 34. And so it's going to be somewhere around here, and it's going to be to this line right about there. Okay, so now I have my second entry in.
Okay, now this is where Night Owl becomes critically important, following the rules, because for 33, you're looking for a target A of 23. Well, you can see that following your entry at 33, market continued to go up for a while. It went up to around 46, it looks like. But then it came down, and lo and behold, what did it do? It came.
So we did get there, but let's go into, okay, whenever you enter an order, in Thinkorswim, they're called bracket orders. We enter on a limit, it got to the limit, and then what we're going to do is that we're going to have a stop price and a target price, right? We're going to have a stop loss and a target profit, okay? So on the first one, let me go and draw that one over here. So our stop loss is at 25.75. See that? I'm sorry, 25.57 half, okay? So what I'm going to do is I'm going to end up going and putting that in right around 20, right about here. Oh my goodness, look at that. If I did nothing, okay, it got right to my stop price. It got right to my stop price by a half a tick. By a half a tick, we would have gotten stop out. Now let me change this, because this is a loss, and I do stuff like this, guys. You should end up, whenever you draw, you should end up doing this too, right? You have to change your colors. So, okay, losses are bad. Red is bad. Okay, I'm making this one red. So there's no question about, okay, I don't have red here. Of course I don't have red, so let me go and pick red here. Okay. And so that's my stop. Okay, so there's my stop price, and look at that. If I just would have gone into, okay, and done nothing, okay, I would have gotten stopped out. Okay, so now what ends up happening is that that's on my first contract, or my primary contracts, right? How many do you put in? That's up to you.
And keep in mind that if you end up trading for the bank, they will allow you 3 initially. So you have to be judicious in which lines you choose. And for that reason, I've indicated 3 recommended lines, the asterisk and the 2 pound signs, but that's not a requirement that you have to follow them. I just put them out there to give you kind of a broad range of entries to play. If you play them tighter, for example, 24, 22, 28, and 33, the rules are still the same. You're just trading more aggressively.
Yeah. And Mark, one of the things, and we've kind of talked about this, I know people ask for recommendations all the time. When I'm doing this, the way I've set this up, and I think you're probably pretty similar, I put a equal number of contracts on my initial primary entry, and that equals the secondary contracts. So if I'm putting in, say if I'm trading 4 contracts, to make this very simple, I'm going to put 2 on my entry, and then I'm going to put 1 on the first secondary order and 1 on the secondary.
And that is exactly how I do it.
Okay. And so that's a very reasonable way to play. You know, if I was a computer, if I had nothing better to do and I wanted to play all 7 levels and I had a lot more money, maybe I'd put 7 on the first contract, and each sachet level going down, I'd put 1 more contract on, right? So that's up to you, but the recommendation is usually to have an equal number of contracts to enter on the primary trades, and then the secondary trades. Sorry, I wasn't speaking to the microphone.
That's correct. And again, in that I don't know each of your individual situations, I'm not in a position where I can tell you how many contracts to play at each level. So my recommendation is for you to figure out what works best for you. If you're playing a small account, the best thing for you to do is to play 1 contract on the 3 marked lines, the asterisk line where the stop is, and the 2 hashed lines. And if you've got a much bigger account and you're more flush, then play the additional lines. I also recommend that if you can afford it, if you can afford 4 contracts, then put 2 entries, 2 contracts on your first entry, 2 contracts on the 24-22 in this case, 1 contract each on the 33 and the 51. But again, after you've done that, and we need to move along, Jim, because this is the most critical concept of sashaying, we need to move along. What happens once that secondary entry elects? Okay.
Let's do that. Let's get the lines in. I just want to get that first stop, the first target profit in also. Okay. So the red is our sell, our stop loss, and let's get in our profit target in here. So we know that where we're hoping to go to. Okay. Because I think that this is a really good example. Okay. So the profit target, and I'm just going to go. I'm not going to be aggressive, or I'm just going to end up going with the recommended B. So that's 139. 23.94. So if I come over to here, 123.94 is right around, there's 95, so 94 is right around here, right? So 94, and again, it's not going to be perfect, but it's going to end up being right around here. Okay, now this is our profit line, so this one I'm going to make green. Okay, let me. Problem is I always have to change the board. Give me a second. Okay, so this is going to be our target line. Okay, and by the way, this is a good practice for you to go through. Okay, when you're working, so that you know where your orders are, if your system doesn't automatically put your system on. So here's our initial stop. Here's our initial target. Now, when I go in and I put my first secondary trade on, and that's this line here, you already told me about the stop. Where's my target? Where's my target for the secondary?
Well, on this secondary order of 33, you're targeting 24.05.
So I'm targeting B also on the secondaries?
Yes.
Okay. Okay, so
bear in mind that you want to sachet out, because ultimately what we are trying to do is, if we are allowed to trade 3 contracts, we don't want to be in more than 3 at any time. And this is the critical concept of sashaying. When you have more than 1 entry, when you have a secondary entry, now you've got 2 entries, 2 different prices. let's get out as quickly as we can with a small profit that will allow us to back off our stop. I call this concept buying a stop. So that, for example, with the 24.33, if you target 24.23, which is target A, that is your sachet target, meaning when that 24.23 elects, you are back to one entry, and you can now back off your stop to the next level, which was 24. Well, in this case, you would be backing it off to the level that you just bought, the 24.67 half.
Okay. So let's kind of go through that. Okay. So I can either use A or B when I, whoops, I'm in the wrong column. When I'm putting in a secondary order, okay, my stop loss is going to be the same. Right, I'm not changing.
At the time you place the order, yes.
At the time I place my order. Okay, now where am I going to put my profit target? I'm going to end up being a little bit more conservative, and I'm going to put my target profit at A.
At A, because once you get to A, you've taken off your excess entry, and now you can push your stop farther into the farther up.
Okay. So let's make the profit first, then we can decide what we're going to do with it. Okay, but I want to make that profit first. Okay, so I'm going to end up putting a green line, right? I'm going to put a self. This is for the second order only. So this is if I had 2 contracts on the first one, okay, 1 contract on the second. I'm going to end up putting in a price to end up having my bracket order, right? Because that's what they're called. This was, I got in on a limit. How did I determine I was short? The answer was the 7 hours of homework that Mark did yesterday for the 2 markets, okay? He goes through an enormous amount of analysis to be able to figure that. That's proprietary, but you get that signal every single day by 6 o'clock p.m. or a little bit after, but you're in the markets and you know the direction. Okay, so here's my limit. It's going to be 124.23. So 124.23 is right around here. Okay, so this is my order, and I'm putting this in at the same time I'm putting this one in. So it's right around, that's 27, that's 35 a half. So it's right about there. Okay, and let me make, because this is going to be a limit order, right? Because this is when I'm going to take profits. So if I take profits, okay, right, entry is we're just using right now. Entry is aqua, and this is going to be green. Okay, so now what ends up happening, okay, let's go through this. I've shorted my third contract, because remember, I was short 2 when I started. So now I'm short 3, as this thing is still moving against me.
It's moving against you, but your stop is still up at the 57 half, and it did not get there. So you're still alive.
Right. And so at this point, I'm writing nasty gram emails to Mark in the middle of the night because it's moving against me, right? And then lo and behold, what ends up happening? The market reverses, comes back down, and trades through my limit order, which means that I've just made money on that first trade. When you make money on that secondary trade right here, when I say the first trade, I mean the first secondary trade. Right? When you make money on that secondary trade, that's a sachet. Now, here's the question. What do we do with the money? We can either put it in the bank. Mark used a term before, buying a stop. What he does with the profit that he makes is that he takes the stop and he's going to move it further away from the money. Now, Mark, I just ended up sashaying 2 levels down. So which stop do I use now?
Stop that goes with that sachet, 24.67 half.
Okay, so now what I'm going to do is I'm going to end up taking this stop, and I'm going to use the money that I made not to end up offsetting anything. I'm just going to preserve the life of this trade. Now, here's what ends up happening, okay? If I do get stopped out, because the thing is that it's pretty much dollar for dollar that he's doing this, right? I'm just going to move it up and make believe that, oh, let me do this. I'm going to double click on this line. I'm going to double click on my stop. And how many things did I just move it up?
It goes up to 24.67 half, so you raised it by 10 ticks.
Okay, so I just bought myself 67 half, okay? So I just bought myself 10 ticks, and I have to bought myself right off the chart is what I did. Okay, there it is. Okay, so what happened was that the money that I made, now here's the whole thing. If we go to this stop eventually, I would have lost the exact same of money if I didn't do any of this sashaying stuff that we're talking about, right? It would have gone straight up to here. I would have lost and I'm done. Now, by doing the sashaying during the middle of the night, what happened was that I was able to push my stop back. Now, let's talk about orders, right? Because this is the difficult part. Every order, okay, in Thinkorswim or in IB or in a lot of systems, you can put in bracket orders, or one order sends another, which cancels another. So what happens is that if this order fills, right, this is the initial entry for the limit order. Remember, we're short. And we then ended up putting in an order that said, here's my stop, here's my profit target, right? So we put a OCO order, one order cancels another. So if my profit target is hit, it cancels my stop. If my stop is hit, it cancels my profit target. Then I have a second trade in, right? And the second trade in, which is the first primary, first secondary trade, right? This one comes in here, and that's the one by the asterisk. Well, that hits, and what were my limit, right? It was a limit order to enter, and then it also bracketed, or it triggered an OCO order. Here was my limit order to take my profits on my second trade, and my initial, right? I didn't touch my initial stop yet. My initial stop still stayed at the same price. Okay. Once I made the profit on that secondary trade, I used my profits to push the limit order back. The stop limit order, I'm sorry, yes, the stop limit order, I'm sorry, it's not a stop limit order, it's a stop market order, right?
I recommend using a stop order because you want to be sure you get filled. If you use a stop limit order and market leapfrogs over your price, then you're in trouble.
Remember, you have to think backwards, guys, because we're short. So going up or stops, going down are limits. I just blew that when I was thinking stop limit, and we're just using stop orders. So I pushed my stop back. So when Mark talks about this successful sachet, it was a second order where we made profits, and we used the profits to push the stop back.
And you'll hear me speak in terms of buying a stop or of successfully sashaying. It's the same thing. When you have a successful sachet, such as in this case, you sold the contract at 33, you covered it at 23, you just made 10 ticks. Now you are pushing your stop back by those 10 ticks you just pocketed. And this is what I mean by defensive trading, because as we can see, Euro more or less has been going up during the session, but we're trying to short it. And therefore, we're defending our position. We're in defensive mode. And so when we make these little profits, use those little profits to push your stop farther away and keep your trade alive. And I'll let Jim continue, because this, again, is the whole point of this exercise, is so you can learn how to manage with the price array.
Okay, guys, we've been going just about an hour, but there are some more questions, and I want to do one more example. So for those of you who have to go, we're not going to be presenting any new information. If you want more information, and I posted this in the chat also, just go to capitaldiscussions.com/go night owl, and there's information that you'll be able to end up getting. I'm going to end up staying on, and I'm going to end up going through, okay, the second example of a sachet and where we are to be able to go through. But
and for those of you who have to leave now, remember we are recording this, so you can come back and listen to the recording later on today to see what you missed.
Okay, great, thank you. Okay, so we successfully sashayed, okay, in part 2 of our video here. We successfully sashayed. I used the money to push my stop back. I bought a stop, okay, in Mark's lingo. Okay, so what am I going to end up doing now? Well, I have a second one. Remember I told you I was going to sachet a second time. And so the second time I was going to sachet was by the second pound sign down here. It's at 24.51. So let me go and draw that one. Okay, so at 24.51, and let me go and get my. Now this is going to be a limit order.
While you're drawing your lines in, Jim, I'd like to, I can't name names, but we do have some Night Owl traders now who are in the Capital Discussions membership, and I would like to offer my congratulations to them. I know of 2 individuals in particular who each began with Night Owl a little more than a month ago and began trading with the bank, and I've heard from each of them in the past couple of days that they are saying they have now qualified to trade the bank's capital because in using Night Owl, they were successful in their tryouts with the bank, creating $9,000 of profit on the bank's electronic simulator. So I'm pleased that we've had early success in the Capital Discussions membership. So those of you who are with us now for the first time, know that your brethren out there, some of them have already gone down this path and succeeded with it.
Okay, so let me go. So here was the second sachet limit order. Okay, so I'm putting in the order. Here's my limit. Now, again, Mark, okay, whenever I put in an order, it's always going to be, I'm going to enter on a limit, and I need a stop and I need a target. So my stop doesn't change, right?
Your stop won't change until you get a successful session.
Okay, so when I'm putting in my order right now, nothing changes, okay? Now, I'm going to have my profit target. Again, I'm going to have my profit target be, you know, relatively conservative. I'm going to want it to be A. So I need to put it in at 124.41. And so that's going to end up being right about, let's see, that's 43.35. So it's going to be right around, 24.40. Okay. So 24.40, that's 38. I need to go up a drop, up. I'm trying to, that's 40. Yeah, 24.4. Oh, it's 24.40. So it's right above there, right about there. It's going to be. So it's going to be right about here. Okay. So
that's your green line.
So that's my green line right about here. And I got to go up to 24. It's right about there. It is. Okay. It doesn't make a difference if it filled in 1 minute or the next, but it's oh, you know what? It did. It's there, but I messed that up. Let me do that again. That's close enough. Okay. Now remember, this is going to be a green line, as Mark just mentioned. Okay. So I'm going to come over to here. I'm going to come over to here, and I need to end up making that my green line. Okay. So when I take a look at this, okay.
Let's not lose sight of why we're doing this, because this may seem complicated to some people, but what we are doing, we are protecting our trade. We are on the short side. Euro seems to be going up. It seems to be favoring the long side today. So Night Owl may be wrong in expecting Euro to drop, but it allows us the ability to keep our trade alive by backing off our stop every time we reach one of these target A levels. And it's keeping us alive until the end of the day. And consequently, when these situations happen, which are actually more often than not, when Night Owl is on the wrong side, I mean, more often than not, we can get a couple of sachets, keep ourselves alive for the day. We don't get stopped out very often.
So what I'm going to do is that I want to end up actually, because I moved the line last time, but what I want to end up doing is I actually want to duplicate it. This way you can end up seeing what ends up happening. Okay, and let me just duplicate that line.
The original line was at 57.5.
Right, and that's what I just did.
Okay.
I just did that one, and so let me edit this.
And now we have one at 67.5.
And so now what I'm doing is that when I got that successful sachet, I used that as my stop price, right? I used
that's correct.
And so now what I'm going to do is that since I successfully shade this, I should use this as my stop price, right?
Once you have a successful sachet at 41 on this third entry, then your stop becomes 86.
Yeah, so it's the one that I have highlighted.
Yes.
Okay. So the thing is that this next stop, okay,
it's way up there.
It's going to end up
close
using
to that.
46, 86.
86.
Okay. Don't you love it when the stop goes off your chart and you just have to end up making your chart higher to be able to see your stop? You bought so much time. Okay, now look at where we are. It's and let me highlight this down to here. And this way we can see this graph again. So now what happens, I've pushed the stop up completely. So by making a successful sachet again, I was able to end up pushing my risk target even higher. Now, if I wanted to be more conservative, I didn't want to end up losing money if it keeps going against me, I could use a shorter stop. But the problem is that if you use shorter stops, you can also get vibrated out of your trade.
You'll get taken out in the noise.
Okay, so the whole concept, okay, of the word sashaying that Mark ends up using is, and it's critical because it's actually, to me, it's the beauty of the system. What ends up happening is that if the market uses against you, you do what every probably trading class has ever told you not to do. By the way, every other trading class, have you made a lot of money with them? Okay, so what? Okay, so do the opposite. No, but here's the thing: if you add money to a losing trade, you can do that as long as, number one, that was part of your plan, and number two, you have a well-defined plan to get out, to stop your loss and bleeding at a certain way. So number one, okay, is that when we go into the trade, okay, and it goes against me, remember what I said, if I was to use 4 contracts, I would use 2 on in the entry. So what was number one? As long as it doesn't go, I only have half my capital. So the other capital that I'm going to be adding is in reserve to be able to do the second or the third sachet. By the way, we can do a fourth one here. I'll get that in a second.
If
But
you're a hunter, you've still got some arrows in your quiver.
exactly. So what happens is that I entered contract number 3 here, but look, I took contract number 3 off here. So now I only have 2 contracts on.
That's correct.
And remember, I'm trading up to 4 contracts. So what ends up happening when I hit this next sachet, right? I don't re-sachet. You don't re-sachet once you end up making a profit, right? You're done with the sachaying. Now what happens is once it goes up to this target and I sachet, I put in my right sachet, secondary orders kind of mean the same thing. As I go to put in my secondary order, my secondary order, I put it in here as a limit order, it comes back and I make my profit. So what do? I can end up then buying or pushing my stop back even further. So what ends up happening is that once I put in, I had 3 contracts here, right? When I sashayed, when I got out, I'm back down to 2.
And remember, people, yes, we are backing off a stop, and you've probably heard over and over again, never back off your stop. We are only backing off the stop when we have banked some profit. We are buying a stop level farther away with the money we've already made.
Right? That was probably the single most important thing about what I think that gives Night Owl the success rate that it does.
That's exactly right. That's why it has the high percentage of wins, because we're winning. We're maybe on days like today where we seem to be on the wrong side, we're still getting these little wins. We're keeping our trade alive, and we're not getting stopped out. We haven't been stopped out yet, and we won't get stopped out in today's trading, and we'll get to that in just a moment.
Okay, so now what happens is that it's keeping the trade alive, because every time you have one of these little reverberations, and they happen all the time, right? The markets almost never go in a single direction. If they go against you, you know, they take 3 steps forward and 1 step back. And what Mark's doing is that he's making money on that 1 step back. And so now when it moves against us, we can end up staying in the trade long.
We're making money on the 3 steps forward and then 1 step back on those days when the market is moving against Night Owl's direction. If Night Owl had identified today to be a long side day, if we had bought the overnight low, we'd probably be, you know, feeling fat, dumb, and happy right now, because we wouldn't have needed any sashaying to keep us alive. So this is not something that occurs every day, but when it does occur on a day like today, we are glad that we have this weapon in our arsenal. It keeps us alive. It gets us out of trouble. And as we will get to here in just a moment, we will finish the day at worst with a small loss, maybe only a small profit, but we have lived to see another day. And in the case of the bank, we never came close to their $3,000 loss limit.
Okay. So I know what's going to be going through everybody's minds, because this happened to me, right? You start having these days where Mark's right, because he guesses their direction right more often than not. And you start saying, why am I only starting with half my contracts? I should put them all on. The problem is if you put on all your contracts, you can't end up putting in the secondary orders, and the secondary orders are what gives you life. And so what's we've cut now, we don't have empirical data and we haven't run 20,000 back tests, but Mark's traded this live now for a while. And it just feels that using half of your capital to start and half of your capital for secondary trades is easier. 4 contracts is not a huge number. And so starting with 4 contracts, starting with the 4 contracts in our arsenal, okay, up to being able to trade up to four contracts. I'd start with 2, and then I'd use 2 for sashaying. Now, here's the thing about sashaying. If they successfully sashay, I only have 2 contracts on. So I could sashay, if they're successful, for as long as they're successful.
Well, keep in mind, too, that if you decide to trade for the bank, and the bank is providing $150,000 of trading capital and allowing you to keep 80% of the profits you make. So effectively, 80% of $150,000 is $120,000. So they're basically handing you $120,000. This is not a loan. It's their money. They keep the money, but they're only keeping 20% of the profit. So in exchange for taking all of the risk, the bank will let you trade their capital and keep 80% of the profit if you can document money management skills. And the reason we selected to use this array to show you Night Owl, we deliberately picked a difficult day because Night Owl selected the short side. Euro has generally gone up in this session. We wanted to show you how Night Owl will keep you alive with its sashaying technique, because that's what the bank is going to test you on when they give you the tryout. They want to see if you can manage their money successfully. Yes, the easy thing to do would have been to take that original entry at 24.22, keep your stop 24.57.5, and do nothing further. If you had done that, you would have been stopped out. Market went up to 58, just 1/2 tick beyond that stop, and you'd be feeling really upset right now about that. Whereas if you successfully sashay, if you put forth a little more effort and do the sashaying, learn how to do it. This is why you have a simulator. Simulate this for a few days till you get the hang of it. Once you have simulated this and you know how to do it, you will bless your lucky stars for days like today when you have successful sachets to keep your trade alive.
Okay, so let's go through how to actually end up doing this. Okay, once you end up signing for this service, okay, you end up getting this email, or it comes to you if you choose it as an email, because we're going to be doing this in this system, right? And this over here, you can end up having plans and notes sent to you every morning. And like I said, it's not morning because you know, we always think, okay, us options guys think morning because the market opens at 9:30 in the morning. For us, it opens at 6 p.m. in the evening for Mark. So you get it every evening, every early evening, and you have your trades and you can put together your plan. So let's go through how this would actually end up working, okay, in terms of a normal trade. Because I know that a lot of people have asked some questions because I don't think they understood how this ends up working. So the first trade you end up putting in, and I'm going to use Thinkorswim for an example, you can definitely end up putting in the first trade as a limit order, and it's called a bracket order, where you have the limit order to get in, you have a stop price below, remember, because we're just short, okay, so the stop I'm sorry, the target is below, because that's the profit target is below, and the stop is above. Okay, and so that those targets stay there. Now you can also end up putting in your second order. Okay, if you're still awake, okay, after you end up putting this, you can put in your second sachet order to end up putting in a limit order, okay, and a profit target. So what does your order go into? The answer is it goes in that my profit target is here at the green line, and my stop is here initially. Now here's the challenge, okay, with the ordering system, okay, and why you need to end up having either a better ordering system, or if somebody knows how to weigh that, maybe you can end up having a different system. But if you use bracket orders, once you end up having this successful secondary order, right? In Mark's term, we've successfully sashayed. I shorted a third contract. I got out of my third contract. Now what you need to end up doing is deleting or moving just this arm of the OCO. Now remember, this is part of an OCO. right? And a one order cancels another. So here was the limits, the stop order, right? The stop market order, and here was the limit profit target we had. So what I have to do is I have to take 1/2 of the OCO, right? And what I have to end up doing is that I then have to end up making it higher. Okay, now that's the problem, because that happened at, if you're not awake at 4 o'clock in the morning to know that you got hit, that's a challenge. And so
You've got to use alerts. You've got to use alerts if your platform doesn't allow for this, because again, I can't emphasize this enough. It's always nighttime somewhere. So somewhere in the world, somebody always has to do something in the dark. And this time it was the North American traders who had to make their adjustments in the middle of the night. So you've got to use sound alerts if your platform does not have the ability to do this for you with contingency orders.
Okay. So the thing is that there are ways to end up doing this and not making these OCO so that one order cancels another, but then you have the risk of having one trade get executed and then it ordering twice. And so there is no perfect solution for this unless you have a trade system with a set of complex rules to be able to end up doing it. If you have a limit order, and you then end up having the alert to end up waking you up to change the trade, you can end up doing that. The challenge always is, you know, and Mark's gotten this question a lot, you know, can't you end up trading this during the day? You know, Mark's written notes to the global market and asked them if they would trade only during our open hours, but they won't do it. Okay. They trade when they want to trade. We can't end up controlling when the market moves where. And so the answer is no, this is the opportunity. Now, I will say this, one of the things that I can do to wake up less, right? So that I don't have to get woken up every time I sachet. What I can end up doing is that I can have this order over here, okay, move by this order. So what I can do is that I can end up putting in, okay, remember, I'm going to change this because now I'm going to have 3 contracts on as soon as I do this. So if I end up having an order, I'm going to have a 1 lot here and a 1 lot here. Okay, and then what I can do is that I can end up having, if this order gets filled, okay, cancel this order and move it higher. Now, what did I just do? I do have an issue, okay, somewhat, because now this line up here, this limit order, is not linked, right? This stop market order is not linked anymore to my limit order here. So there's a chance that it runs up and it runs all the way back down. And I would buy one here and I'd buy a second one there. But that's a lot happens a lot less frequently than this order being filled and bouncing back up. And so if anybody has, and this is a great discussion to have in the forums, if anybody has a way to be able to end up, okay, doing it without, you know, the constant alerts waking up in the middle of the night, that's great. You know, Mark's sleep habits are, you know, I guess, you know, impaired forever, okay, because he's had, you know, this type of trading. But I think that you can't end up ignoring the sachets, because the sachets are what's
Will keep you alive when you're on the wrong side of the market.
and that's absolutely critical. Okay, guys, I'm going to take questions, but that was all of the presenting, and I'm going to take a look and see if we explained sashaying. We ended up explaining about the stop as a stop loss, a stop market order, what's being recorded. How do we determine on the short side? Well, that's the secret sauce of right there. I'd say that there's 2 secret sauces. One is the high percentage that you pick direction correctly, and 2 is that when you're wrong, this small limit orders, and I'm going to call it good risk management principle, only using half your capital to start, half of it to end doing this, ends up really taking the losses and minimizing them when you are wrong.
That's correct. And I think with respect to the question of how do we determine whether to play long or short side, I believe that may have come from somebody who doesn't realize that I will be sending out the array every evening. For now, it's posted in the forum, but we're transitioning over to the email system on Capital Discussions. And you will see the S in the case of today's Euro array, the S that's in front of every row, that means short. If we were playing the long side, it would say L. So don't think that S means stop and L means limit. No, S is for short or L will be for long.
Okay, and so the thing is, I guess one of your subscribers said, you know, he didn't end up changing his stop. He learned his lesson. Okay, today because it did. Boy, it just barely ticked it. As I go through, how much does the bank charge? They have free platforms and paid platforms. Their free platform is it's a pretty decent system. It'll have, you know, one order sends another, so you can end up doing bracket orders, and then that order cancels another. So you can end up building complex orders. What you can end up doing is you can't end up doing what I ended up saying. It's that moving the stop is the same problem that one of the other subscribers ended up mentioning that you'd have the same problem with their free system. Over here, I guess there's a lot of market movement, okay, at times when London starts or European starts, without question.
That's true, and interestingly, we see that even more with crude oil. That's about the time crude oil starts to come alive. Crude oil typically is docile between 6 p.m. until maybe even as late as 5 to 6 a.m. the following morning. And that's why I mentioned earlier, for those of you who are trading with the bank or trading small accounts and you only can do maybe 4 contracts in total, you may want to consider playing the euro trade in the overnight, and then in the morning when you've taken your profit on the euro, which typically occurs in the early morning hour, and by early I mean, you know, 6 to 8 a.m., euro typically has reached target Bravo, which is a good place to exit. It's a nice solid profit. Then consider taking a crude oil trade. Look at crude oil and see if it's anywhere close to the array from the previous evening, and if it is, then play crude oil, because crude oil doesn't usually come alive until around the time euro's dying out for the day in that 7 a.m. area.
Okay, you guys, you see the volume bars down here? This is when Europe's opening. Okay, so this is when Europe's opening, and you can see the volume really starts to pick up around, you know, a little bit before 3 o'clock. Okay, and it went sideways until when the market opens. That's when you'll start to see some movement. What happened over here when the U.S. markets open? You start seeing even some more movement. And then, what time do the markets start to? What time do they euro close? Number one. And what time does the volume start to dry up?
Well, in the case of the euro, the settlement time is 3 p.m. Eastern time. It will continue trading until 5, but the smart money people are usually out by 3 p.m. or standing by until the end of the day, where they can kind of take advantage of the novice traders.
So if you take a look at this right here, you see it closes at 3. Okay, and I have the overnight sessions. Okay, U.S. wise, overnight sessions shaded. So from 3 until 5 p.m. they're shaded. Closed from 5 until 6, and then we start all over again. Okay, so that's the question. So we've answered all the questions on the hours. Commissions from the bank.
That's a question to ask the bank.
Okay, or yours.
I don't represent the bank, and so I don't answer questions pertaining to the bank because I am not their representative.
Okay, but let's put this question in perspective. The bank's going to, you know, give you, as long as you pass the successful test and everything, they're going to give you $150,000 to trade, and you're going to get to keep 80% of the profits, and you want to negotiate commissions with them. Okay. I just want to put it in perspective, guys. The answer is it's not a lot, but even if it's a few pennies more, it doesn't make a difference. Okay.
This is not speed trading. This is not high frequency trading. We're taking very few entries per day compared to the high frequency traders. So commissions should be a non-issue for you.
Which moves more, CL or Euro? The answer is that they both move. Mark's answered this, that the Euro moves more overnight. CL moves also overnight and during the day. I'm going to end up just showing you CL real quick so you can see that its volume patterns aren't all that different. Okay, and you can see here, if I highlight, you know, again, today, let's just highlight today so you can see what goes on. Right, volume starts to end up picking up. Oh, you can see here, there's very little movement. It does start to pick up, okay, when the European markets open. And you can see that it dropped when the European markets open, and it started to move up. They do move a lot, okay, in the U.S. when the U.S. opens, and then when there's any type of news. Right, you get to see this because this is the inventory report that came out. Okay, every Wednesday, okay, an inventory report comes out at 10:30, and it makes the market move. By the way, there is a rule in the bank that they don't want you trading within 1 minute of a very important economic report. So you'd have to end up being out 1 minute beforehand. You could be in afterwards, but you are 1 minute out.
And
Okay.
they will specify which reports you have to be flat. They will tell you. And again, if you're not, then thanks a lot. We'll see you later.
Yeah, I know that the difficulty is trading, and I'm going to end up working on some way of figuring out how to end up getting in the orders overnight, because the thing is you do have to end up moving the orders or you're going to end up getting woken up at night. I do end up realizing that. Okay, other things.
If you're in North America.
If you're in North America.
Keep in mind that commodity markets are open worldwide and commodity traders are worldwide. So if you're in North America, it may be overnight, but not if you're in Europe.
Ninja 8, I don't know if Ninja 8 has that type of complex order. We don't know. There's probably about a dozen different systems that, by the way, you can trade this with your own capital. It's just that if you want to have the bank put up as much as $150,000 for you, you have to use one of, they have about a dozen different systems. Ninja 8 is on there. There's a whole list. When you sign up, you'll end up seeing it. Mark will send you all the information. Then you look at the bank. If you take a look at it, what's the margin in trading? It's really not important what the margin is for 3 contracts, because that's the bank rule. The bank rule is no matter what you end up trading, you're not allowed to do more than 3 contracts. Is CL...
The bank will eventually allow you to increase your lottage from 3. They will start you with 3. They will allow you to go as high as 12, but you have to prove to them that you can manage their money responsibly before they will let you trade up to 12.
So the answer is it's really not that important, at least from the bank's perspective. As for the margin, you can go and take a look at the CME's suggestion margin, but you really have to go to your own broker to find out what the margin is. That I can't end up asking. The cost of the service is, I forgot what.
It's $3.99 per month for one market, $4.99.
No, was that it? I thought it was. I thought we did. I thought it was.
Jim's got, I mean, Tom's got that in the sales piece on the site. We'll have to get the link for that.
And I put that in the link here. Hang on. If you take a look in the chat, I put that in here.
It's down toward the bottom. There, no, keep going. There it is.
Yeah, that's what I thought. Yeah, $299 for one system, $399 for both. Okay, yeah, that's what I thought it was. And then there's discounts if you go out over the years. I will tell you that you know, the system is it's one average winning day pays for a month. You know, and then some. Okay, one average winning day pays for a month. And
I can tell you this: we've got 2 subscribers who have qualified for the funding from the bank, and they're very happy they paid the $299.
So they made right in order to qualify. They made $9,000. They made $9,000 in for 2 months, and they ended up paying. If they traded both of them, they paid $800, and they made $9,000. More than 10 to 1. That's a pretty good return. Okay. Can T4 do that? I'm going to let Mark take that because Mark trades with
T4 can do the contingency orders so that you can put contingencies in there that if your target A profit hits, then it will move your bracket. It's complex, but it does offer that that ability.
On average, I don't know, Mark, do you have an idea what the margin is? I know I need to look at it per contract.
I really hate to talk off the top of my head, but 6 to 7 for 3 would be about right.
Yeah. So go and take a look. You can find that on the CME site.
The thing is, every brokerage will price their margin just depending on how much risk they are willing to take. The CME sets the margin, and if the CME sets margin, let's say at $7,000 for 3 contracts, and your brokerage is willing to let you trade for $4,000 of margin, they're taking the risk on the other 3. So that's really a question you've got to ask your brokerage. What will be the margin?
Dane had a comment in here. He all capital, highly recommends using both services. I would say the same thing for the extra $100. Once in a while, there are days when you don't get a signal in one of them. So, you know, it really ends up, I think, making sense. You end up learning trading. And then if later on you find that you like one versus the other, the problem, okay, that I end up seeing is that Mark monitors this and all other markets, all other the futures, to see which one's giving them the best volatility. Now, there needs to be a pattern and change, and he doesn't make the change very often. But if crude oil starts to dry up, ha ha ha, pun intended, and we need to end up moving to corn or soybeans because it has more, Mark will end up looking at the volatility and seeing which one is having the best return.
Right. Right now, crude oil and euro are offering us fabulous volatility, but the markets that are on my radar at present, in case one of the two that we follow dries up, are cotton, coffee, and the Australian dollar.
Okay, so the answer is that there's always going to be, when the S&P dried up the way it did last year and the volatility came out of it, there's always going to be another market. And I think, is there additional training? The answer is going to be yes, but I want people to watch this video again. And what Mark and I will probably do is that we'll end up recording another video that has just the training information without all of the other stuff. So you won't have all of the questions and everything. And that one, so we can get the entire video down, I'm thinking to maybe 45 minutes on a really difficult day we'll be able to go through. So we're going to end up recording that, putting that out, okay, probably by the end of next week. How can we contact Mark for questions? Okay, the email is nightowl@capitaldiscussions.com, and mine is jim@capitaldiscussions.com, and you can just send emails and that would be fine. I think that's it. Okay, everyone. Listen, thanks for staying in there. Sorry we went over, but I wanted to stop it for an hour. But everybody who stayed, I wanted to end up making sure that Mark and I answered all of your questions. Thank you very much. Good luck. Send us questions if you have them, and hopefully, we'll see you in the forums, and you'll be a member soon.
Thanks a lot, everybody. We appreciate your attention.
Bye now.